How to invest in ETF in 5 minutes or less per month, optimize for Belgian taxes in Belgium. This is the purpose of this episode today. The reason I'm recording this episode is because a lot of people who are not investing in ETFs basically don't know or have the wrong idea about what it means to invest on your own and how long it takes. And I've heard from many people that, well, I don't have time, and so I'm procrastinating. Like I know I should, and I don't have time, right? Now, the truth is, yes, there is a bit of time that's needed to learn about index investing and set up the system. But once it's in place, which can be done, for some people it's just 1 day, 2 days, and some people it's a few weeks, then it takes really 5 minutes a month or less, right? And so the goal of this episode is to show it to you today and then explain to you what I've done so that you understand, right? So the biggest comment I've had on this was someone saying, so now that you manage your own portfolio, you basically have an extra job. How many hours per day do you spend on this? And of course, I was like, oh my God, how do I get to explain this to someone who has no idea? And so that's what this episode is going to do. Right, so there's no need to read the news, financial news. There's no need to check trends, to review company reports, to do any stock analysis, to plan for my next investment in like any complicated way with some trading algorithm or anything like this. No, there's no need to think about the timing. There's no need to even review like a complex portfolio and do complex forecast, any of this. You don't even need to calculate and pay the taxes because we like to do this through brokers who handle most of it for us. So no, it doesn't take time to do all this, and it can be done in less than 5 minutes per month. And instead of explaining it to you and then showing you, I thought I would reverse it. I'm going to show it to you live, and then I will explain what I did in case this is new to you, right? So I'm going to use this spreadsheet. That's why I'm doing this with the help of my spreadsheet. I keep notes and make sure I don't miss anything. And also I can show you basically what I do here with an example of portfolio, right? So I have an example of portfolio. When I do the actual action, I'm not going to explain everything I do because when I'm doing it, I'm just doing it. So there will be a bit of silence. I might say a few words, but I'm not going to explain everything in detail. And then I will come back to what I did and explain why I did what I did and how basically what this means, right? What we just did. So for this example, we have a portfolio that we have set up that already exists. It's a fictive portfolio, right? We're going to make a monthly investment into 2 ETFs, one stock ETF, one bond ETF with their ISIN number. This is the current amount in them. This is the current asset allocation. We've removed the cash. And then I'm going to go and check on my account how much cash there is. I'll put it here. And then I will do the transaction so that I rebalance to the target asset allocation. And that way you have a bit of understanding of what I'm about to do. And then I'll explain in more details. All right. So I'm going to time this. Let's go. Time. Right. And I'm going to show you my screen when it's finished. Okay. Start. Okay. So I've made a bank transaction, a bank transfer to my brokerage account. The cash has arrived. There's about 786 euros. I put in my calculator. It tells me, which is something super simple to build, right? It tells me how much I need to invest. 500 in bond ETFs, 200 and something in stock ETFs. This needing to include custom transactions and all this. And since the markets are closed, I need to make them slightly smaller, but otherwise it will be exactly this. And then I basically select the stock ETF, the ISIN number. Normally you don't even have to do that because it's already in your portfolio. But here, just to show you, if even from starting from scratch, it takes very little time. We need about 20 shares. So that would be 259. So that's good. We buy. It goes through. We do the same with the other one. Of course, you kind of want to check, but once you've done this every month, it's easy to check. It goes fast. You have the second ETF, right? Same here. You want to buy here. About 20, 434 to make sure it goes through. This is because markets are closed, right? So it goes through. And there you go. We've placed the two. We could log out or we could do a few more checks. But basically, if I stop my timer, what I'm going to do is I'm going to stop sharing as well. It shows 1 minute 25, right? Of course, here we didn't basically this is if you already know what you're doing, right? You put the two transactions in, And then you check if they're really in, but here they were both confirmed, so they're both in. And that's pretty much it. So I would say someone who does this the 10th time probably takes about 2 minutes. If you really want to check everything again every time, you probably 4 minutes, and then including login, log off, bank transfer, maybe 5 minutes, more or less. So it's really fast. I'm gonna go back to share my screen. Here we go. Now let me explain what just happened, so that you know what we're doing, right? So I did the live demo. Yeah, I was just going to say investing on your own takes a lot of time. It's one of the biggest myths. Alongside, you need to be an expert to invest on your own. So this might have looked complicated to you if you're not an index investor, or if you've never been on the stock market or made a transaction on the brokerage exchange. But it's not super complicated. Yes, you need to know what you're doing, right? You need to learn about passive low-cost index investing, a portfolio of 1 or 2 ETFs. So in fact, here there's 2 ETFs, but you could do this with a single ETF in some cases. And yes, you need to build the right investing system, which is basically something you build once and then you use every month and it just works for you and you have nothing to do. This is what we call investing on autopilot, right? You build your personal investment plan, then you invest monthly, dollar cost averaging. It means simply you benefit from the ups and downs of the market as you put money in. Monthly investment, for example, or quarterly, depending on your situation. And then you build wealth on autopilot, which means you do what I just did once a month and that's it. It's a lot simpler than what banks and financial advisors want you to believe, because it is. Most of the things that we think we need to do when we're investing, we actually don't have to do. Like for example, like selecting the stock that we think has potential based on some report and some gurus and some analysis and some AI complicated trading algorithm. We don't need to do that. Look at what just happened in a bunch of things. We don't need to look at, like, as you've seen, I haven't even looked at what my portfolio has done recently. I just looked at the asset allocation, I rebalance to what it needs to be, and then I do the transactions so it gets back to the asset allocation. I'm gonna get back to this. So for those of you who have no idea about what we just did and what ETFs and all this even means, we're gonna just get through that quickly. So what can we invest in and what are we investing in? We're investing in stocks. These are company shares. So when we do this, we become part shareholder in all these companies. As you will see, we don't invest in stock individually, but we still own stocks, right? We do then also invest in bonds, which are government IOUs. So we lend money to the government and they pay us the fixed interest rate on those bonds. And the interest rate can vary, but they basically pay interest. And then we don't do this individually. We buy funds, and funds are basically baskets of stocks and bonds, sometimes baskets of just stocks, sometimes baskets of just bonds, and sometimes baskets including some other stuff. We don't go for the usual funds that we see like in movies and that are marketed to us by banks and financial advisors. We go to ETFs, which are exchange traded funds, which are funds traded on the stock exchange, and specifically index funds, because this one will simply track the index. What we don't do is we don't go to a bank that's going to put together an actively managed fund, charge high fees, because those fees are things that we want to avoid. We talk about this in different episodes, of course, but you've heard about this from me already. So index funds, these are very specific products that are designed to track an index with the minimum possible costs. If you select the right index, you basically can invest in the entire stock market using 1 or 2 ETFs, which is what I have done here. This stock ETF with the ISIN number, which is the unique identification number, invests in the vast majority of companies that are traded on the stock exchange globally, so in all countries. And the bond index ETF here invests in high quality short-term government bonds from the Eurozone. And these are specifically chosen because these are excellent. There's a lot of other excellent ETFs. In fact, we cover those in the Index Invest Online course. We provide, we have a list basically of stocks and bond ETF. And here I've selected those that made the most sense for this example. But the one that makes sense for you might be different. Certainly, I don't advise anyone to simply pick those and invest, because that's not the solution. No, I'm not giving financial advice either. Now, these two are excellent, right? But they might they might not be the ones you choose if you were investing yourself. Then, yes, but what should I invest in, right? So we know there's all these things. We invest in a portfolio of one or two index ETFs. And we want those index ETFs because they're optimized for performance, fees, taxes, and simplicity, right? So instead of having a complex portfolio, it's really just two products, one stock index ETF, globally diversified, and one high quality bond ETF, right? And then how much of each to invest in, that's simply your asset, that's simply, it's what we call your asset allocation. So this is something that depends on your personal situation. It doesn't depend on the market. It depends on where you are yourself as an investor and whether you need to have more in stocks or more in bonds, depending on your a number of factors that are in your own situation. And so that's the asset allocation we had in this example, 80-20, right? So this is where we want to be. It's kind of like our compass. Whenever the stock market does whatever it's doing, we have to look at our compass and get back on track. And this is what we consider being back on track for our portfolio as an example. And so before putting these 736 euros, or how much was it? 86, we were at an asset allocation that was overweight in stocks, so 83.57, and underweighted in bonds. And this is normal because stocks usually go up faster than bonds. So on many occasions, you'll find your allocation have been switched towards stocks after you come back after a month or two or whatever. Not always, but often. And so when you put the amount of money you want to invest, which is the cash here, it then allocates it to stocks and bonds so that we come back to the 80-20. And this is just small formula, it's very simple. But basically by investing 513 in the bond ETF and 273 in the stock ETF, we come back to the asset allocation of 80-20, right? And that's where we want to be in terms of, that's the right balance for us. Now, one way of reducing, for example, things like transaction fees that would be, say, a fixed amount per transaction from your brokers, from your broker account. You could also decide to make only one of those two transactions 1 month and the other one the other month. And the way to do that then it would be to invest in whichever of these two ETFs has the lowest asset allocation. That's the furthest away below what is the target, and invest in that one. So in this case, we would invest, for example, only in bond ETFs. And then the following month or the following quarter, maybe we invest then only in stocks. But basically that allows to reduce your transaction fees, which can play a role for like small contributions. On bigger portfolios, usually it doesn't make a big difference. On smaller portfolios, small contributions, yes. So yeah, usually to make it clean, you make both, but you don't have to. How much to invest? This depends on your goals, depends on whether you have already an emergency buffer and your asset allocation, right? But certainly it depends on how much you're earning and saving. So you want to invest money that you don't need for the short term. So for example, if you need to make a purchase in the next 3 years, you don't want to put that in the stock market. It can be on the bond side of things, but maybe a savings account is better, right? And so what you want to invest is for the long term, and that's what we this for this portfolio. Where to buy? So we've used Saxo Bank here. It's an example. It's one of the Belgian brokers. There's 4 or 5 of them that are excellent from a safety perspective and tax management perspective. So they're also very practical. And then foreign brokers, usually they don't handle all Belgian taxes. And so I'm generally not really in favor. And how to buy? Well, we just did that, no? If you don't have a brokerage account, you open one, you fund the account, you select the ETFs, you place the order, which what we just did. And then on the contrary to investing in a regular bank fund, we don't go to the fund manager and put the money there, like they can do, in fact, in the US for some ETFs, from some index funds, not ETFs. What we do is we go through a brokerage account, we buy on the stock exchange an ETF, right? So that's the journey we have to go through to get access to the fund, the index fund. I was supposed to do the demo later, but I changed my mind. I'm going to do that at the start. So what's important also is realizing what I did not do, which I kind of mentioned earlier. But as you can see, I did not do many things because there is no need to do many, like almost any of these things. You check how much cash you have, you check your asset allocation, you rebalance so that you come back to your correct asset allocation, and then you make the transactions. That's it. So it might still look complicated for some of you if you've never done this, but really, I've taught this to hundreds of people, and yeah, it goes very quickly from I have no idea what's happening to, oh my God, I wish somebody told me this earlier, because now that I know this, my life has changed. And so, like, I really encourage you to learn, whether through the content that we have on this podcast, or on the Restaurant Fire Belgium, or from any other book, like books from good authors, or like just learn from someone who's doing it. And if you want an easy way to learn, just simply join the Fire Belgium Index Investing Workshop, the investing workshop here. I'm going to open it. So this is a workshop that is usually available on demand, and where we basically go through how to build wealth on autopilot, evidence-based investing optimized for Belgian taxes, simple practical investing without paying high fees to banks advisors, taking a risk of spending all day analyzing the markets. Basically, I teach you to do what I just did and set up the system. Investing better than banks in just a few weeks, optimized for Belgian taxes in less than 5 minutes per month, which is what we just showed you. Right now, there's basically events in September as I'm recording this, but usually there's here a workshop that's available on demand. You can watch it whenever you want. Come here, sign up, choose a time, and go watch it. It's like just this. A lot of people are starting investing with just this, so you can do that too. And then for sure, join the free Facebook group where a lot of people are helping each other learn about investing. There you go. That's it for this episode. It's a new kind of format that I'm doing, as you can see probably for the podcasts. I've simplified my process. I basically removed everything that was friction for me to create more content and share more knowledge and help more people. So there's no more intro, fancy something, music, outro, that kind of stuff. I don't have to send this to an editor. I'm doing it much, much lighter. That way I feel like I can do more of them and help you more. That's the plan. So I hope you enjoyed this. Let me know in the comments if this format is fine with you. Hopefully it is, because that means I can do more. And if not fine, well, I'm just gonna keep doing more of this for now until I find something better. So thanks again, and see you next time. Cheers.